It looks like it's going to be another rough day in the stock market as the 25% tariffs on Canada and Mexico that Trump initially postponed looks like they'll be coming into effect today. Investors initially were optimistic last month when they heard about postponement, but now it's a reality and that Trump's serious about these tariffs. Markets look like they're selling off even more. Warren Buffett, legendary investor Warren Buffett, said that these tariffs are like an act of war. And in a way, it's kind of true. Is it possible for the market to bottom this week? I don't know, but Tom Lee, Fundstrat's Tom Lee thinks so. Obviously, we have to see what happens. But ultimately, I think that these tariffs and pretty much Trump doing all these policies so fast, so quickly, I think it's part of chaos theory, and I think it's a little bit deliberate. I think ultimately what Trump and Treasury Secretary Bessent want to do is create some policy uncertainty to lower 10-year bond yields, to lower interest rates, to lower mortgage rates so that consumers would end up paying less. But I would almost view these tariffs as like a de facto tightening. This is the fiscal policy's versioning of a tightening. Tariffs, consumers will have to pay more for these goods. And just like interest rate hikes by the Fed, interest rate hikes, consumers would have to pay more on homes or car loans, etc., and that filters throughout the economy. Tariff hikes are the fiscal policy's version of Fed rate hikes, in my opinion, and I have a feeling that'll tighten the economy. It'll be almost equivalent to a Fed rate hike. But ultimately, I think that that's what they want. They want, Trump and Secretary Bessent want 10-year bond yields to go down by creating this growth scare artificially. So I think they want short-term pain for long-term gain. Obviously, we have to see. But you see Secretary Bessent going on these interviews, Face the Nation, Bloomberg pretty much saying that his priority is getting interest rates down. In order to do that, you have to create some short-term pain. And I think tariffs is their vehicle of doing that, creating some uncertainty with consumers and businesses in order to create a little short-term growth scare in order to get interest rates down. That's my theory what's going on. We're already seeing, because of these uncertainties, that the Atlanta Fed's GDP Now calculator went from, I think it was initially down negative 1.5% for this quarter to now down as a negative 2.8% for this quarter. So it looks like we're going to have a quarter of negative GDP growth due to this policy uncertainty. But in a way, I think it's ultimately what Trump and Secretary Bessent want. Secretary Bessent said on these interviews that the first 6 months of Trump's presidency will be the overhang of the last administration's policies from high inflation, and that he interprets 6 to 12 months from now as Trump's administration fully taking over. So I feel like any short-term pain that they're trying to create, they'll blame on the previous administration, and then hopefully by creating this growth scares, this will also help the Federal Reserve to cut interest rates. Right now, the Federal Reserve is penciled in to cut interest rates now 3 times this year due to this mini growth scare from the policy uncertainty with the tariffs. Trump's certainly trying to do a little bit too much too soon, and that's causing this fear in the markets. But ultimately, I think this week will be a bottom for the market. Obviously, we have to see, and ultimately, any dips like this, I think ultimately will be a great buying opportunity. You don't want to panic sell in moments like this. This is an important time to hold your investments, and perhaps if you have some extra cash on the sidelines, to add to positions you're confident in. Let's stay tuned to see what happens.